Shout out to the VIP. This is London with Bitcoin Spike and VIP Trader. Let's dig into the details in terms of the charts for Bitcoin. And guys, we have had a great week in terms of the technicals. We're going to be going through today exactly where Bitcoin is, and not just technically speaking. Let's say on the lower time frames, we're going to be talking about some overall larger solutions. This is London, former hedge fund owner, private, non-SEC, not financial advice. You guys understand that. In terms of the technicals, let's talk about the variety. Let me welcome in some of the VIP. If you're new to our channel, we want to invite you to join our trade group only if you want to beat the market. That's it, guys. A lot of know-how is coming into the mix this year in terms of multiple displays, in terms of setups, communications, etc., both within our trade group and otherwise, and we look forward to bringing that to your attention. So I've got the stream up for chat if we need to chat. And in terms of Bitcoin, I will probably bring up on the screen here on the side a bit of a, let's say, an expanded chart here. Let's do this, and hope you guys are having a good morning. Venus is there. Hey, not sorry I streamed now. Nice to see you, Venus. Very good to see you, always. Venus in the house. What's going on? Venus, great to be building with you in 2023. We are taking the market by storm. That is the idea. So guys, when you look at your input, okay, when you look at, let's talk about this. I've been listening to Bloomberg since probably, let's say, the last 2.5 hours. We'll get into the technicals here as well. I'll put the screen capture up so you guys can see a little bit of a, let's see what we got. If I could pull this over, a little bit of a chart action or some chart action. But as I'm watching Bloomberg, what is the number one thing that I'm running into? There is a state of disbelief, right? A not knowing, right? We're talking about Bloomberg, right? Which is a financial news network. And the search and hunt for answers is prolific, isn't it? Guys, if you've been listening to Bloomberg, the most impressive thing about Bloomberg as we speak now is the fact that they don't have an answer. Without a doubt, guys, they literally have zero direction in terms of where things are headed. It's just, it's disappointing a bit to hear the waffle, right? They're on waffle, full-time waffle, right? So let me make sure that we are set up here in terms of the charts. And we're over on this chart, okay. We're over on this chart. I think I can bring that over so you guys can see just a bit better, but that's fine. That's fine over here. Now, in terms of Bitcoin, let's dig into the chart just a touch here so we can take a look at where we're at. But I'm just going to encourage you of one thing. I say this to the VIP all the time, and you guys know this without a doubt, is that the answer for the answer for the next move is, first of all, it's with you. Bottom line. Is it going to be with me? It's going to be with that guy or this guy or this girl or that girl. Guys, Bloomberg right now, if you listen to the last 2 hours of Bloomberg, literally sitting there, and this is not an uncommon experience with Bloomberg, literally sitting there saying, oh, we have no clue. We don't have any idea. We can't even explain why things are going the direction that they are. Literally, the world's largest financial news network. So when you're looking at that, I guess the question becomes, is there some sort of an agenda behind the indecision? Is there some sort of a, and you guys know that there may be another layer behind such. We've seen some weird things in the market. Guys, pay attention to this. What was the preceding, the CPI report before this last CPI report? What happened? The CPI report before this last CPI report, we had what? Big front run in the market. You guys know that? Which means what? Before the data release, before the CPI report release, the White House itself actually addressed this issue. The markets reacted to the report before the report was out. 30 seconds, a minute before the report was out. The market reacted before the report was out. The White House spokeswoman literally had spokesperson literally had to literally had to cover that issue, guys. That's a big deal. That's a real big deal. So when we're looking at things that seem a bit out of the norm, when you're looking for that technical solution that we're always driven to find, first of all, it's not going to be out here. I'm going to say the majority of the time it's going to be with you. And I'm going to say this. When I say the answer's with you and you're not going to find it anywhere else out there, it may be a bit of a two-prong analysis here, but look at what the answer, if the answer is going to reside with you in terms of, you would start to think, okay, well, how would I even strategize? How am I going to strategize? Now you're starting to think, how would I strategize if there are mixed signals in the market, right? The next part of this would be, well, how am I going to maybe adjust my schedule or make sure that I have enough time around the inner workings of my family, or maybe you got another gig, side gig or job or otherwise. But the quick and easy turn on, boom, something, anything, and just find I want the 2-minute solution. And we talked about this a bit yesterday. So it's interesting to roll into this. If you guys were listening to Bloomberg today, you just heard 2 plus hours of Bloomberg. Guys, that's like the world's leading financial news network, right? It just is. Bottom line, Harvard Business School. I tell you guys all the time, go to Harvard Business School. Their libraries in what? The Bloomberg building, right? It's a big deal. So looking at today's kind of session we had, and what was it, jobs report came out pretty strong, right? Yeah, jobless claims, wasn't it? Yeah, it's Thursday. So jobless claims came out lower, we're under 200,000. Looking at that, these are some strong economic signs. So Powell's going to have to deal with that. And I don't want to turn into just a commentator along with Bloomberg and not knowing what's going on. What you don't hear on Bloomberg, right? What you don't hear is the following. You don't hear them talking about really how to trade, a level of indecision. Is there a potential for upside, for downside? What are the technicals that we would look at in terms of, if we were to, let me clean up some of these. Shout out to the VIP. Hope you are all doing well. Guys, all of you, I hope all of you are doing well. Looking at operation underneath now on the 8-hourly. I have the 8-hourly pulled up here, but operation underneath the Bollinger Band. I did, for the record, guys, I think most of you are added to the new indicator. Very nice. Most of you are added to the new indicator already, okay? It's a nice indicator, okay? We can go through a bit of that this morning just to kind of, I can discuss what it is. Why don't I discuss what the indicator is? Let's do that this morning, okay? Financial news networks, everybody's pointing in different directions, where the market's going and why. No one knows why. I really like this chart. I want to show you guys this chart, and then we'll go through the specifics on the indicator. Let's see if I can grab this and nicely put this, place this over here. There we go. All right, now this shows a nice feature here. Let me go ahead and clean this chart up just a bit so you can really see it. If you look at the price action on the candle wicks, let me clean up some of these indicators and show this to you as cleanly as possible. Hope you guys are doing well wherever you're at. Chris, I know you're in Australia. What's up, boss? Hey, Chris in the house. Venus, your California town. We got some other California guys. Now, flat bottom support, this specific structure here is technically a roof, okay? Technically it's a roof pattern, all right? Flat bottom support is caught in line with preceding pivot here, bam, okay? This is a recognized pattern. What we're concerned about and what we're interested in right now is the following. We're interested in this expansion here that gives this specific, at least, and understand this, that gives this specific formulation or this specific patterning a bullish tone. Okay, it just does. It gives it a bullish tone. When we were to look at the potential complication with this before we get into the indicator, and I'll refer VIP to this stream so that they can get into the indicator. We'll timestamp it so that you guys can have something to refer to. That'll be good for use of the indicator. Now, in terms of level of resistance, level of support, the one complication with any expansion that you see here would be the following, would be the potential, okay, now we look at a very high probability of breaking out of any kind of expanding volatility with an expanding level of support and resistance. The caveat and catch is that you need to be prepared along, I told you guys on the 4-hourly, absolutely, to be prepared along this level of support. Without a doubt, guys, you know that, always prepared along this level of support. So we haven't had a good hit into that level of support, but if you guys will spend some time with Bulkowski, okay, one of the foremost authorities on TA, you will see that the complication on every one of these patterns is the following, is that this initial phase here, okay, pay attention guys, and we would be happy for it to boom, move to the downside, okay? At which point, in terms of a micro expansion or a minor expansion that we're dealing with, we would immediately be looking at a bump and run potential, which is a very high probability pattern. Now, what's a bump and run? A bump and run has the following, has a lead in. This portion would be called a lead in, all right? That would be called a lead in. And let me get back on the chart over here on this side, good. So the lead in phase requires a consolidation, okay, in this zone along the top, requires a consolidation, and then it requires a drop. Now, what kind of a drop would be required for a bump and run? You guys know what would be required would be a drop that is technically, just technically speaking, okay, if we're going to look at this and pay attention to this, guys, this is good stuff. And as we were to look at the technical requirements, if I were to look at the amplitude of this consolidation here on a bump and run, I'd be looking technically at, if we call this 1, amplitude of 1 here. I need the amplitude here, okay, to be replicated times 2, ideally, at least just so that you know, in terms of a bump and run, and they are phenomenal to trade where? Along support, okay? So as you're trading, and you may wonder why a lot of people lose in the markets, right? You hear that all the time. Well, the majority of traders lose in the markets. What is the angle here that we can learn something from, okay? That one of the top producing patterns in the market, the bump and run reversal, right? Which you know about it because you're VIP. I'm going to say this, the majority of the market is not looking for a 2-time hit to the downside as the primary opportunity in this zone. They're just not, okay? The majority of the market is looking for that, tell me is it going up or tell me is it going down, with no real preparation in terms of the underlying condition. If you pay attention to influencers, which we survey the market fully, so that you know, fully. When I hear someone talk a language or something else, we survey it enough to where we normally know who's telling you that. Just so that you know, when you write something down, technically, normally we know who's telling you that. Just so that you know. I want to pay attention, guys, to the technicals, right? What's the most popular thing that is popularized? Once something moves, then get on the bandwagon. Then we want to get onto the move. Then we're going to participate. It's going up. It's going up. Hey, we're going to go long. It's going up. Very few people at all in the markets talk about an entry, a favorable entry along a level of support. They just don't. You don't hear it. It's not popularly disseminated, at least. The hype is when something has gone up, has made people money, and people want to jump on and make money like everyone else just did, right? So we are one of the groups, guys, maybe one of the only groups, I'm gonna say that, maybe one of the only groups, if not the only group, that's gonna tell you that this level of support is ideal based upon probabilities, right? And to tell you, in terms of the ideal drop would be what? The ideal drop would be a 2 times the amplitude here, okay? And we do have some other considerations here, noted. We'll talk about some other considerations here, but in terms of this, let's say another consideration that could push it beyond the level of support, which really, as we dig into this pattern, and guys, you've got your forecast tool in terms of the capital line, right? You've got that forecast tool. That's going to be very nice to watch you guys use that, and I think that you're going to like it quite a bit. I think that you'll like it quite a bit along with Fire and Ice. 4-hour buy line did get hit. As we were to look at the specifics here, realizing that the optimal, guys, what is the optimal best entry on this? Believe it or not, with this expansion here, the best entry would be at a breakdown through the level of support. Please allow me to have a sip of coffee. Thank you very much. The breakthrough the specific level of support. Let me take the other, and we're looking at Bitcoin on the 4-hourly. A break through the level of support, although it seems, and you have to be careful, guys, you never overexpose at any specific trade. You know that. 100 rounds until you're booking positive trades, for positive trades, your trade amount, just technically speaking, guys, going through years of data, etc., and looking at this, the best routine is 4 positive trades. Be able to book 4 positive trades. Then consider even trading any real significant amounts of money, guys. Increase that trade amount when you can book positive trades. Otherwise, you can do the equation. In terms of this breach of a potential, of this level of support, were we to get down into this level, that is, for the record, pay attention. That is not according to me. That is according to the primary authorities in TA. Guys, that is going to be the key. The break of the level of support, this is going to be the primary entry zone, the most bullish that you can get, right? Big deal. Hey, what's up, Chris, my man? Chris, boom. Nice to see you, Chris. And Chris, I really gave you a lot of credit yesterday. I'm not sure that you were here, but I really talked about you yesterday and how many years you've spent in the market, and just the fact that the new traders who really want that easy solution, that you are just a great example of what years in the market can do in terms of the just level of proficiency that you have developed technically. Brother, my man, VIP all the way. And I just want you to know that, as a matter of fact, like I used you, I'm not sure that you were there, but I used you as a great example yesterday, talking to the people who want the quick, easy answer. You've seen them come and go. I won't repeat all of yesterday, but I really used you as a good example yesterday. And that was just, it was a pleasure to do that, because you're just a great trader. You're a good friend. Great to have you in VIP, my man. And military, huh? What's up? What's up? That cuts through a lot of stuff. Good man. In terms of that, appreciate your service, huh? Joint Forces in the house. What's up? So as we were to look at, the specific level of support, okay, the rising level of resistance, the descending level of resistance, we've got a bit of a, let's call this a half diamond. It digests better with everyone than calling it a roof or something else. We call it a half diamond, okay? It's a real pattern, trades, without a doubt. So as we would look at the potential here, just measure this out and find your optimal zone here. If we could get the specific drop down through this level of support, this would be the ideal pickup in here, right? With the following caveat, with the complication of what? In terms of your probabilities. And you guys have seen enough in the back. I know, Chris, you know too, the probability is like, yeah, that 50% as we go into, let's go into, where is my Fibonacci? Come here. Fibonacci, as we were to look at trend-based fib extensions, okay? If we were to look at a completion down to the 100% amplitude of this half diamond, boom, bam, bam, down to the 100%, meaning that the amplitude, you guys got this, that 100% of this amplitude, that's what the Fibonacci trend-based extension gives you, that tool, boom, will lock straight into that 100% completion. Now, understand this, when we talk about fractional probabilities, boy, it sounds like a fancy word, doesn't it? It sounds like, oh, we're going back to a math class. We're not, guys. When we look at this, thanks, mate. Yeah, I didn't see that. Greatly appreciate it. You got it, Chris. No problem. It was a good talk. You might want to rewatch it. No problem. Huh? Let's see. No problem. My pleasure. VIP. Boom. So when we look at the probabilities, and I just tell you, you can tell Chris has been in the market because he's not looking for an up or down. Chris has been in the market for 15 years. 15 plus years. He's not looking for an up or down. He talks about probabilities, the weight of the probabilities of the pattern. But even with the weight of the probabilities in the pattern, what? He's prepared on both sides of the price action at all points in time. And Chris, you know you can't find that level of discipline to participate in the markets from someone who just shows up. Hey, everybody knows this. For someone who just shows up and says, well, I want to know, is it going up or is it going down? The guy you meet at the gym, at the front of the gym, walking up and he hears you trade and you have a trade group. Oh, do you think something's going up or going down? It's like, you got to be prepared both directions. You just have to. You really do. But you understand the probabilities. And you understand also, you guys know, you could tell the guy at the front of the gym, you could tell him, well, you've got a 72% chance of going up. Now, you could say that to him, you could deliver the truth to someone, and they're going to go, ooh, I'm going to go put the money in. They're going to completely miss the fact, and this is such a great example, it's a bit humorous. They're going to completely miss the fact that you're going to likely stack orders along this line. It's like, it's the guy who wants the quick answer that wants to go and hit it, or the girl wants to go and hit a quick button and make a quick buck in the market that all the time gets punished. You guys know, a quick answer, quick buck gets punished. That's just it, right? A little extra work to identify the patterns in play, right? Identify the key areas of confluence in terms of your probabilities. Easy stuff, fractional probabilities. That's easy stuff, you guys know that. It's whether or not we go 100% on this triangulation, if we can break down below and do what? We'd like to technically see a candle set, boom. If we were to look at this pattern, we would like to technically see a candle set, boom. A heavy-weighted candle just, bam, set underneath that line of support. That will give the market participants indication that, okay, we have breached level of support. And we have a two-tiered level of support. I will definitely, and this is Bitcoin, she loves to do this. We are very, very accustomed to this in VIP. You see this level of support here, internal level of support. So we have a two-tiered. If we were to look at this, we have a two-tiered level of support. Internal here, external here, okay? It's a complication, all right? But it can definitely create some, I'd say some problems if we were to just consider one of them. Always consider your internal and external lines of resistance or support. Just, it'll make your life a lot easier. So we have picked up at a preceding pivot. If you trade Bitcoin, pay attention because that's what she likes to do. You guys know this. Nearly automatic. You got to pick up in this zone. I'd say these two pivots here, another pickup in this zone. It's Bitcoin. It is Bitcoin. See the preceding level here. Pivot, boom. Some pickups here, pick up here, boom, boom. Okay, so she's just, the more that you trade Bitcoin, if you can continue to remind yourself of that fact. Preceding pivot, all right? Likely entry for longs. You'll start to book trades. But this is one of the issues that needs to be talked about today. It's not the quick, easy answer, right? It's not the, as we were to look at it, the quick, easy answer wants the quick, easy trade and is going to quickly and very easily lose the account. Hey, quick, easy answer, quick, easy trade, you're going to quickly and easily lose your account. Bottom line, you guys know this. Now, looking into spending some time with your patterns, spending some time with your probabilities like you guys are, and really listening when I say things, that the ideal pickup is on the breach of a level of support here. All right. Now, let's go into the indicator just a bit. Let's talk about the indicator just a bit. It requires a lot of calculation. Okay. It requires a lot of calculation in terms of the indicator. It's heavy on, I'm gonna say this, it's heavy on volatility. I want to talk about what it is for you guys today. Show only capital line. I'm gonna go to show only capital line. I double click on my indicator. Let's go to show only capital line, okay? That means that the volatility expressions, and guys, I want you to think of volatility right now, group it in with RSI, okay? Right now, group it in with stochastics. Group it in with buying and selling pressure. That's it. Don't get out there and say, well, I haven't traded volatility. I haven't even looked at volatility. You've dealt with RSI, you've dealt with stochastics, okay? Even MACD to an extent, MACD likes to lie quite a bit. You guys know that. So think of volatility as a measurement of buying and selling. Literally RSI, stochastics, we're all pointing in the same direction. I'm going to tell you, RSI, stochastics, and volatility. If you see the equations behind this, there's not just a landmark difference, okay? Just group those together for now. So when I talk about volatility, the issue literally like throw up another skeet, it's gone. Right, the discussion, just do that for right now. You don't know what volatility is? Group it with RSI, group it with stochastics. If you don't know what stochastics are, very closely related to RSI. Literally the issue of what this is, I literally want it to be a skeet thrown up, that's it. RSI, stochastics, volatility, bam, okay, encapsulated like that. Okay, so case closed for a minute. We'll get into the calculations if you want to, but if I show it to you, you'll be like, oh, I see. Okay, so what we have is a kernel regression. Now, we have a kernel line. That's your capital line, bottom line, capital line. Why do we call it the capital line? Because I want you to think about your capital if it turns red. If you're long and it turns red, I want you to at least think about your capital. Not financial advice. Go think about it. Maybe you think, you look at it, you do the back testing on it. You do it. Maybe you decide you want to put more in when it turns red. Maybe you're going to say, well, instead of being more afraid, I want to put more in at different levels below. See how that works out. Stack orders below. See how it works out. Maybe you're not longing and shorting all day long like some VIP. Some VIP will take the red and say, well, it's time to short. Time to short. Let's take a look at the 5 minute. And as I talk about what volatility is, I want to put it in terms that you're looking at in terms of, and let's just look here a little bit of the price action here. Red, and what's happening here? The average, pay attention, the kernel, when I say a kernel regression formula, it sounds like we just aced all our math classes, doesn't it? It does, huh? Master's level, we got it. A kernel regression formula. Kernel calculations are nice, guys. Don't worry about it. It's a weighted average, okay? Again, skeet, shotgun, what's a kernel regression? It is, just take the issue, it's gone. Kernel regression is a formulated weighted moving average, meaning what's the average, right? We sold 5,000 cars today. Okay, at what price? What was the average price? Hey, all right, over a period of time here, this is an average. That's it. Of what? Let's just call it RSI, stochastics, okay? Buying and selling. This is an average of buying and selling. When it's red, what's happening? Well, the sellers are engaging, okay? The sellers are engaging. When it flips blue, what's happening? Well, volatility is going up. RSI, stochastics. So buyers are engaging. The average of the price action is rising. Average of the price action is dropping. Can you have divergences? Let's save that for another day, because if we really get into the divergences, you're going to start playing with it. I want you just to focus on the average, which eliminates a lot of the divergences that you'll see normally you'll see and get excited about on the RSI or on a hidden divergence. Stochastics, RSI, MACD, okay? They can be polluting elements. I'm just telling you, it could be a nuisance, huh? It's like, well, the billboard's a good thing. Billboard's a great thing, huh? We're in business, we want to put up a billboard, right? Yeah. Well, you say, well, it's a great thing, but there's one problem, sir. Well, we have 50,000 billboards on the freeway. It's like, oh, it's hard to get your message across. It's literally like, you understand that. It's like, well, the divergence is here. Well, you have maybe on a bigger time frame. The divergences, we look at them a little more heavily, right? But when you look at the 10 to 20 lower time frames, and we have conflicting divergences all over the place, it's like, well, the billboard is a good idea to drive some business. One problem, we have 50,000 billboards on that freeway. Like, okay. So as you look at the average stochastics, as you look at the average in terms of RSI, relative strength index, buying and selling pressure, okay? When you look at that average, this is what's being demonstrated to you. Now, you're going to notice some white amidst the red and the blue, right? Some red, white, and blue. Now, we're going to discuss some different tactics to use with the white. It is a potential transition area, okay? It means that amidst, and just pay attention for right now, there's a lot more to this, guys, a lot, the way that it's been designed. Amidst the pressure, boom, you see the red pressure to the downside. Let's bring the chart up as well. Do you see, let's gear this out in terms of the top line price action that was achieved. Look at the sellers begin to engage, okay? Sellers beginning to engage on price. What was this drop on Bitcoin? Let's take a look. It works on every coin, guys. Every asset. Pardon. Over 2% of a move. Now, the sellers begin to engage. What really happened here in this mid-level, this potential transition? What really happened here in this white zone and a potential transition? Huh? Well, the buyers started to try to flip bullish again, okay? Now, the first thing that you're going to say is, well, that seems overwhelming. There are too many white areas. I don't like it. I don't like the indicator. There are too many possible transitions. Let me have a sip of coffee, please. Good morning, VIP. Hope you're doing well. Now, when you look at potential, thank you for that, guys. When you look at a potential transition in the market, what becomes relevant? I'm going to tell you, cyclically speaking, I'm going to pull up the 4 hourly real quickly. On the weighted average, again, guys, it's just an average. You sold 5,000 cars this month, great. At what price? You're not going to go through all the prices. You tell me, okay, well, the average price was this. Okay. So we want the average, boom, of the volatility, of the buying and selling pressure between the participants. Bingo. Now, let's take a look at and this is good stuff, guys. Let's take a look at this. I want to take a look at that weighted kernel regression. What is that? Just an average. Case closed, issue closed. Kernel regression means, and I do that, another skeet flies up. That's it. Kernel regression equals what? An average. You sold 10,000 cars, great. That many cars, well, great. At what price? This is what this is. It's an average, okay? You got it. Now, what I like about this is this level of, I'd say, cyclically defined action here along the upper threshold and along the lower threshold, okay? These parameters you're going to, and you know already, when you were to look at, and I'll tell you this is not, so that you know the level of complication, this is not a simple RSI calculation. This is not a simple stochastics calculation. And I'll bring in what it is. You'll see what it is, okay, in terms of the specifics. But as I put it like this, you start to immediately recognize it's like, oh, that's RSI, right? You say, oh, that's whatever indicator you're familiar with. Take it as a volatility gauge right now. That's it. Take it as a volatility gauge. What we're going to discuss now is the upper bound and lower bound. You see the colors in the background. You see the bright blue above, the red below. Those gradients represent, along with this black area behind. Try and view it a little bit differently. You see the black area behind that channel formation? Let me make this a little bit bigger. And going through this for the VIP, this is our new indicator. Very exciting about this. You see, you start to say, okay, wait, I want to define, let's look at this. I want to define the black area behind. Okay. So we have some operation up and above, return back down to the black area. We have operation above. It seems like we have this upper and lower bound. Now it's going to vary depending upon which time frame you choose to engage yourself in, but see that back set with the upper and the lower threshold limit for now, okay? And I don't want to go too far into the details right now, but if, for instance, I wanted to, if I wanted to, okay, and before I get into the volatility necessarily, if I wanted to say, okay, well, I have a prior, let's look at this, a prior pivot in this area of the average. Okay. I want to know what this specific hit again at this average level would be. Pay attention, guys, pay attention. I want to know what the price would be at this specific average level, okay? Of volatility. If the volatility average gets back to this price, what would that price be? You're not going to find that on your chart, okay? good guy to pop up then. You're not going to find that at all, right? You're just not. So the indicator is going to help you with that. So what I'm going to do is I'm going to identify, pay attention, this is good stuff, guys. On the horizontal, for me, myself, I'm gonna choose this horizontal ray. Let's say 1.5. 1.5 would be the preceding here. Let's say up here, I'm at over 1.9, I'm at 2. Okay, so 2, and just guys, you'll get this. You'll get it, you'll like it. Now, what this is me saying, well, okay, let's say I see a lot of action back in this area. But I want to identify with the recent price action here at this specific pivot. There's a pivot here, pivot here. I like this zone. I want to know what this price would be. Now, you could use levels of resistance and support all over the place on the actual price chart, right? But I'm talking about what has the average volatility been? What is it expressing to me that I want to capture in terms of price? So this is the first complicated thing I'll go over. I want to double click. I want to go in, and what was this price again? 1.5, okay? At 1.5, let's see where it is. Price target level, right here, I want to type in 1.5. I want to know price target level, 1.5. Okay. Now, my price target level has just popped up to tell me, based upon the current price and the current average, if we were to shoot up, boom, and get there on the average, and this is where a little bit of a delay function comes in, but the complication of the overall, and really the beauty of the overall indicator comes in, and we're going to talk about this. It's a nice segue. So the average right now would be 23,224. That is that level specified by the indicator so that you know, and it's based upon pricing right now. As you get closer to that average and the specified level of volatility, it will become more precise and relevant, okay? As you get closer to that specific top line range. You see the top line range? Look at all of the activity here. You guys see this? Let me do this just a bit so I can give you guys a good view of this. Let me do this. And let's do this. Let's do that. Let me pull this over just a touch so you see it. Give you a little bit more of that range. There you go. Now, top line range becomes more specific and relevant. It becomes more accurate and relevant the closer you get to it. But it is a projection right now, 23,000. And what you do, you see that, it pops up as TP. Now, technically take profit. Technically, that's the way it's structured. We'll get into that. Okay? But right now it pops up on the screen. The TP 23,225 is what? Let's just review this. That preceding pivot was at 1.5 on the volatility scale. So based upon the current market structure, I'm projecting 23,225 to be, okay, that equivalent hit, bam, back at the upside. Now 23,225. And we'll get into some additional complications, but just looking at that, what would that be? 23,225. Let's say I wanted to mark this out just for now, okay? And guys, a good tool. It's not built to be an easy answer. It's just not, but it doesn't mean it's not the right answer, guys. 23,225. Pay attention. Okay, so were volatility to reach back up based upon the current market data, we'd be looking at a move of about 2.33%. Now, as the average gets closer to that level, pay attention, it will become more precise and more relevant, okay? Yes, pay attention to that specific statement. Right now, we're covering the nuts and bolts of ZPAC, okay? Our specific volatility tool. But do you conceptualize, okay, so the notion is that the volatility is, I don't want to say programmed. I don't want to use the word programmed, but the volatility has an upward expression threshold maximum across the top, right? And we're interested in if volatility were to get back to that threshold maximum, let's say on the 4 hour or any time frame, what would our price be? What would we be looking at in terms of price? right? Now, thanks for the coffee, excuse me. As you were to look at this, you understand very quickly, well, that assumes what? It assumes you're done with the downside volatility. It assumes you've turned a corner, we're heading back to the upside, and we need an estimate or projection to the upside. It assumes the equation has been satisfied along the bottom of the guys at bottom of the range for the cyclical volatility, right? The sellers are done. Let's just say that very easily. It assumes the sellers are done, right? So in terms of that flip to the upside, transition from the red to the white to the blue, that's it. It just is. As a matter of fact, on there, it sounds like I'm Mr. We got flags all over the HQ. We don't, huh? But from the red to the white to the blue, you got to find that transition. You just do. Bottom line. Now, and this is the capital line. So, in terms of that, you appreciate what a projected top line range threshold is. You see, if we were to complete here, back to this preceding pivot, and that's a conservative preceding pivot. I might say I want to be more aggressive. I want to get back up to this pivot. It's higher. Volatility average has shown us it can get there. Yeah, that was up here. Boom. Now look at the relevancy of it. Oh yeah. That was when Bitcoin really started to cruise to the upside. I'm going to be real aggressive. I want that target way up there, preceding pivot, in line with all that price action. You see how that's more aggressive? You see how these moves here are during a consolidation? Now, what would I need? Well, that's at 2. That's a preceding average of 2. What would I need to do? Well, I double click here. I'm going to go here, and I want to know 2. I'm going to put 2, price target level 2. I know this seems like it's Greek. All right, 23,325. Let's see here. Let me see. 325. So about another $100 on top. Okay, it's another $100. So 23,225, 23,325. About another $100 on top. Not much. It's not much, huh? But it's projected first of all. Now, why do I have the moving average MA? This is going to be the point and the kicker right here. Why do I have the moving average in yellow? Why do we have a moving average in yellow? Now, first of all, if you're using this, good morning to VIP. If you're using this right now, I tell you guys, our other indicator caught the bottom of Bitcoin. Okay? Daily green buy line. Okay? Bottom line. Let the indicator speak for itself. Capiche? Now, theme. Modern, where are we at? What do we want to do? What are we looking at? The moving average. Now, this assumes if you're using your indicator, show only capital line. Okay? Show only capital line is if you double click your indicator, you'll find the option to only show the capital line. All right? Click it. That'll clean up the volatility in terms of the pricing and the activity between the buyers and the sellers. All right? So, why is that moving average in yellow? Moving average. There's prices above me. There's prices below me. Z, 1, 2, 3, 4. Z, negative 1, 2, 3, 4. What is that? Well, okay. Let's dig into the details without getting too complicated. Moving average is going to be what? We deal with the Bollinger Bands all the time. You guys know that, right? So the moving average is going to be the 20 moving average. Okay, it's going to be the 20 moving average. That's it. What's used with Bollinger Band? The 20 moving average. Okay? So you can talk pie in the sky with we want to of the 15 different averages we could use from the 55 to 21 to 9, 4, 7, to 200, 100, get into the Fibonacci. We're not going to go to the Fibonacci's, right? The point is, with Bollinger, it's a very well respected moving average, the 20. And it's normally accompanied with the 5. The 5 and the 20 play off well together, especially for futures traders. But they're not exclusive. Those aren't the only ones you can use. We know that. So Bollinger Bands are going to use the 20. Now, on your indicator, this is in yellow, like a warning, okay? And what I'm going to say is it represents, and it is exactly the 20 moving average on that time frame and the price at that moving average, okay? It's the midline of your Bollinger Band. It's a key focal. Guys, if you trade it, it's a key focal, all right? I have it in yellow because it's the most natural thing to want to target and pay attention to. It's right in the middle. It is the return line. At some point, you're going to return to that average one of two ways. You're either going to go down or up to it, or it's going to come down or up to you. As a matter of fact, in the markets, pay attention, as a matter of fact in the markets, you're either going to go down to it or go up to it, the 20 moving average, or it is going to come down to you, or it's going to come up to you. Let's look at the daily. I hope we're not too complicated. You guys know this, but as we look at this, this is the markets. We get to enjoy the technical expressions, the technical features, understanding, the technical understanding. Now, as we saw the cap line here in red, what was that I explained to the VIP? Number one trade group, America's number one trade group. Now, international, looking at the framework as we turned red on the daily, I told the VIP, be prepared for a hit into the 20 moving average, okay? Be prepared for a hit into the 20 moving average. And what did we see? And I calculated this. I projected the time into the specifics here in terms of the equation. I said, well, it may be 5 or 6 days away because we have one of two options. And the one of two options are the following. I can either have price go down, and the 20 moving average was here. You guys like this. I know you understand this. 20 moving average was down here. VIP that were there in the back that we were talking about this earlier. It's like, okay, look, the cap line has turned red. Your capital line has turned red. All right? When you look at, let's say when we were here, price was here, moving average was here. Me stating to you, one of two things will happen. We'll either go down to the capital line or to the moving average. Price will either go down to the moving average or, and this is what occurred, the moving average will come up to price. Okay? The longer the price holds at the same level, the moving average is going to chase it. Okay? Same thing works in reverse. If we're underneath and a held position underneath, moving average is going to come down to us. So it doesn't, the red line, understand this and take this away from this discussion, please. We'll turn back on, activate the takeaway here. Is that the red doesn't necessarily mean you're going down, okay? We just saw that this week. It could just mean that there's a potential for contact with the 20 moving average. Still not guaranteed, but we saw the pause here, and technically it does mean that the sellers are engaging. The sellers are winning. Now, we've seen 2023, the initiation of this year, has included light volume through the roof for risk-on assets. Shorts getting squeezed? Maybe. They can explain it a million different ways they want to. The technicals aren't going to always be in your back pocket and pad your wallet and your bank account. They're just not. Which is why we have, I won't say why we have different ways of, I'd say understanding or explaining technicals, but we use a general principle. We'll use a probability, right? We'll use a general principle and a probability, and instead of a hard and fast rule, right? Whenever you see this, I mean, you wouldn't want to, it's not in the markets that let's say every time you see the signal, you want to sell. Every time you see the signal. The market's full of people getting chewed up who are doing that. So we focus on general rules, principles, and we focus on probabilities, okay? Which normally, if you focus on a probability, means that you're prepared to operate in the current dynamic, and you have a fallback, okay? If you have a 70-30 split in the market, you're prepared somehow for the 30% split in the market, right? Which could just be a level of exposure. Focus in. If you have a 70-30 split, it could just be a level of exposure that you're willing to put on this specific trade. And if it doesn't work out at all, the next trade at a 70-30 split should, right? And you start to really beat the odds if, well, the next trade at a 70-30 split, if the two didn't work out, I mean, it's a 70% odds. That could be part of your strategy. Involvement at different levels, right? Could be part of your strategy, or it could be a 1-off, 2-off into 3 or 4. Pushing 3 or 4 off at 70-30 split? Probably not, guys, right? So back to the capital line. The red, an indication that we could revisit the 20 moving average. And remember, just again, real simply put, the 20 can come up to us or we can go down to the 20. And this worked out well for purposes of our discussion. You guys know that. We did, in fact, and we're in the process of breaching and setting a candle underneath that 20. What do we hit into, the IP? What do we hit into? Boom, lower band. Straight out of New York Institute of Finance, right? Straight out of New York Institute of Finance. And you'll see, let's go back into the lower time frames. Let's explore this a bit more in terms of, we went through some complications, okay? In terms of that moving average though, I think we've covered that. Yellow, I'm just gonna say yellow. If you're targeting, just remember there's 2 things. Either you can go down or up to the moving average or it can come up to you, all right? So you can get price to move there, or, and that's why there's a few reasons why it's in yellow, but warning, you can either get price to go there or it can come up to you. It could be a long waiting game like this, and it could just come up to you. So let's dig into the volatility parameters. Let's kind of jazz up the action on the indicator. I think you guys will like this. Now, you have 2 options. If you turn off capital line, show only capital line, if we take that off, let's say I want to see all the volatility, let's pay attention. This is where things get exciting. This is where things get really exciting. Not just talk, what do we want to wake up and just talk about moving averages all day? Not necessarily, huh? What are you doing? Well, let's just wake up and talk about moving averages. Yeah, maybe not. Let's talk about something exciting. Thank you, excuse me for the cup of coffee. Now, what is this what is going on here? I've made it to where we're not just on the moving average, okay? We're not just plugged into, or let's say that the capital line. Now we're looking at all of the volatility. Look at this. What in the world is this? What is this, huh? This is the buying and selling that's going on in the markets at each range defined with an upper and lower bound graphed out to literally show you the volatility and the buying and selling pressure in the markets. You'll notice up and above the capital line, we're what? We're blue on the capital line. You'll notice down and below the capital line, we're what? We're red. And you'll notice when you have contact and a challenge directionally for the capital line, you'll notice what? You'll notice you turn to a potential transition color white, which means that we're not fully over or under the capital line. Capiche? We got it? You guys got it. Now, as we were to look at fully being under the capital line, red. Fully being over the capital line, blue. Transition, white, okay? We just chose white. Could have made it gray, but we couldn't, or translucent, but we didn't have, actually, I think we have the translucent option on here. There's a bit to this, but understand, when volatility's up and over, it means what? That means we're buying. That means people are buying in the market. Now, it becomes a great trade tool. And I won't get into the calculations of the actual volatility bands here that you see. These just call them volatility bands. But what you're, let me bring this down. What you're looking at is not particularly just a straight up RSI or a stochastic. You're looking at the exact buying pressure, boom, coming into the market and an upper threshold. You're looking at kind of a maximum dynamic here. Now, if I get into what it really is, it may bore you, okay? I can tell you very quickly, it's a standard deviation. It's a threshold measurement away from the average price that the bulls are able to push up to, or that the sellers are able to push down to. It's our measurement, a deviation, meaning away from the moving average. It's deviating away from the average. You sell cars, you say, okay, great, you sold 5,000 cars this month. Great, at what price? Well, the average was, $89,000. It's a luxury worldwide operation. $89,000, okay, great. Say, well, we sold, it was a 5-day stretch where we sold, listen, it was a 5-day stretch when we sold 10 cars, let's say 4 cars a day, 5-day stretch, and they were an average of $450,000. That was a good week. That was a good week, right? Instead of the average being $80,000. No, we had 4 days where we sold like over $400,000, like 10 cars over $400,000. Ooh, okay. So buyers were buying, boom, 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 in those 4 days. If you saw it on a chart, you might say here, okay, so you had this time, and this, let's say this would be a month here. You had this time, you're selling it around the average, and then bam, 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 started to sell up into higher prices. More volatility, buying pressure to the upside, okay? Now, as you look at, this is one of the things that I really, really appreciate about this indicator. I want you guys just to level up and pay attention right now. This here, you see a pivot here. On the right-hand side, on the scale, I see it, that's 3. That's lighting up on the right-hand side. Let me pull this over just a touch. You guys see that in the bottom right? Yeah, on the right-hand side, 3.2. Okay, it's showing me a figure. It's showing me a figure here. And I'm seeing there's a ton of volatility measured up into, bam, this level. Look at the price up here, bam, okay. Hit, hit, hit. Now, this is not the average. This is the actual hitting of volatility. Bam, 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 up into these levels. What does that coincide with? It coincides with bam, bam, bam. And you will see some divergences. Without a doubt, you'll see some divergences. But I want this cyclical expression across the top. I want to know what it is. I want to know what the levels are. Looks like we've exceeded some of those levels. Made it difficult for shorts, right? But as we look at the conformance in terms of the volatility bands, okay, and guys think, again, what is it? What was a volatility band? RSI, stochastics, buying pressure. That's it, buying pressure to the upside or selling pressure to the downside. You guys got it. So as we look at the conformance, let's call this a conformance. Look at the conformance. We have some aberrant, we have some major plays here up and above. You guys got that, some big time issues. But for the most part, this is on the daily, and this will replicate down through the 5-minute, 15-minute, etc. For the most part, bam, 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 bam. We are just lined out. And I look at the right here. I want to look at the right, the scale. I want to see what this is going to show me over here. About 2.6 to 3. Wow, okay. Now, when you're trading this live on a lower time frame, you're going to know, like we just poured down here, what is this? We just poured down to, bam, and pay attention, VIP, pay attention. We just poured down to, and this looks like at about 2.1. What does that mean on the volatility scale? It is a coinciding aspect in calculation with the standard deviation, which means deviation from what? From the average. It's going away from the average. You got it. So standard deviation is at 2. Bam, target hit. Okay? And so what do we have down here below? We have, boom, we have 2. We have, it's -2. That's the lower band. Now, if we want to know, boom, 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 boom. Now these are additional levels of standard deviation. That's all that they are on the screen right now. Just additional levels. Bollinger is built in with 2 to the upside, 2 to the downside. But I've gone ahead and put 3 and 4, and I think that this will be 5. Let's see what this is. 3 and 4. I can add 5. If I want to add 5, no problem. I just copy and paste that. Okay? Let me get in here. All I do, guys, is add in a Bollinger feature. Don't let it be complicated. If you don't understand everything right now, say, London, I don't get it. I need help. So I've added in additional, essentially their standard deviation calculations. Because as we look at the tendency of price of Bitcoin to fall within standard deviations, let's say the Bollinger Bands, 95% of price actions included, 95% is included within the standard deviation of 2. But I'm interested in the other 5%. Okay, 95% is included in 2 standard deviations. What about the rest? What about the other 5%? We need to know what the other 5% is doing. That's where you're looking into your volatility. So we saw the hit, bam, down into 2. That's literally going to be your bottom side Bollinger Band. It's set at a standard deviation of 2. Now, I've added on here just on my chart. I want to know, Bollinger, he catches 95% of the price action. Okay, cool. I want to know, where are the extremes? Where is the other 5% of the price action? That's not good enough for me. 95%, that's fine, but I want to know where that 5% is. Is there an edge to be gained? So as you look at the right side of your scale here, you're going to see numbers to the upside. You're going to see numbers to the downside. All right? Now the 2 to the upside and the 2 to the downside is what? Those are literally your Bollinger Bands. Literally the 2 to the upside and the 2 to the downside is literally your Bollinger Bands. That's it. So every time that you see, look at this guys, every time that you see volatility up and above that 2, yeah, you're seeing hits up and above those Bollinger Bands. Big deal. Let's see what we got here. Side note, Dixie price just moved below 8 EMA on daily and 8 EMA through 21 EMA on 4-hour with 50 EMA providing support, 50 fib possibly back in play, but early days. Very good. Dixie, okay. I may have, I'll let you handle that. Throw a chart up in the back if you'd like to, Chris. Thank you for the update on the DXY. Big time. So out of the box, what is it going to tell you? Out of the box, in terms of Z-Pack, it's going to tell you and show you, okay, the amount of time that Bitcoin or anything trades up and above as targets, right? Standard deviation level of 2. Bollinger's going to catch 95% of the price action. But look at all of this conformance up and above that is not scheduled in to the standard deviation of 2. Look at this, guys. I mean, we're smart guys and girls. Standard deviation level of 2, okay, sure, you caught a lot of the price action. But look at this. Look at this. This is like 3. This is all over in 3. So it's a highly relevant line or a highly relevant level, not just the standard deviation of 2, but the standard deviation of 3. When things get going, it's the standard deviation of not the 2, but really that 3. Boom. And look at this. Look how perfectly hit the 3 is. Look at this, guys. Pay attention. If you're not paying attention, pay attention. Look at this. You'll get this. You'll like this. Look at this. Perfect hit on 3. Bam. Like somebody's targeting it. Like literally, it's a target in the market that paid 6.67%. All right. Again, bam, scheduled hit right into the 3. Standard deviation beyond Bollinger Bands 2 standard deviation. No, this one hit into 3. Bam. We want to pay attention to cyclical price and the parameters of such so that we can understand it and operate with it and prepare for it and take advantage of it. Bollinger Bands, standard deviation of 2, catches 95% of the price action. But we're seeing that actually the standard deviation of 3 is hit perfectly multiple times. That's not in your books. That's not in our materials, right? It's out there. The notion is out there, right? So we've put it into a visual for you. So you can see, okay, yes, I see the 3. That's over on your scale as the standard deviation away from that moving average. How far we are away from the average, that's all it is. Got it? So I will put together some more details on what this actually is. The buying pressure gets up. It gets way up here. On this recent launch, wow, we got up to not a 2 standard deviation, we got up to a 4 standard deviation. Now, we're going to get into questions as to whether or not is that always going to be a reversal or could it be a continuation? You've pushed up so high with the standard deviation, you've left the 2 standard deviation from Bollinger so far behind, I don't think anyone's paying attention to Bollinger anymore, right? So we're going to have some screws to tighten up here in terms of your understanding of this, in terms of whether or not you're just blindly going to deploy levels, let's say shorts along the top. All right? When you do your back testing, larger time frames are going to be a bit more solidly situated. Pay attention, guys. If you're trading this, pay attention. Larger time frames are going to be more solidly situated. They're not going to adjust or bend. Your targets aren't going to adjust as quickly. Your lower time frames, it's going to fly all over the place. All right? You guys are going to like this. Now, with VIP, what is the key issue that we deal with? Never overexposed. You're dealing with a new indicator. You're dealing with a new indicator. You don't put the house money on it, guys. Huh? What would you say? We don't want you to be in a position where the renovations to the home have taken 8 years. It's like, he's been day trading, right? You don't do that, right? The renovation, I just see your wife or maybe your husband, well, the renovation on the house has taken 8 years. It's like, oh, why is that? Well, we decided to start day trading with the allowance for the house. No, guys. It's a joke, but it's not a joke with VIP. You guys know that. Heavy reserve capital, especially on a new indicator. Especially when you're trying to see how your schedule fits in with paying attention to the indicator. There are some alert functions. We'll get into all of that for right now. And I have taken the capital line only off. And good morning to all the VIP. I hope you guys are doing well. Yo, hope everything's going great for all you guys and girls. Shout out to Chris. Shout out to Venus. Shout out to Scotland. What's up, Scotland? Appreciate that. Thank you for the vow of support. Now, in terms of the issue of maximum expressions beyond the 2 standard deviation, Bollinger presents to the world his findings. Standard deviation of 2 means 95% of the price action is going to fall in there. We want to know what is the, and I can get a visual back test of it on this. Well, that's fine, standard deviation of 2, that's good. But how many times is the standard deviation going to hit up past 4? Right here, you see it. To the right is your standard deviation scale. It's how far you are away from the average, guys. It's your volatility. You guys get it? It's your volatility. If your average is, just say 1, and your price is 1, pegged, what's your volatility? There is no volatility. It's 1, pegged at 1. If your average, let's say your price, just say your price fluctuates from 1 up to 2, down to 0.25, up to 10, down to 0.25. And I won't go, if I go too much further beyond, it's going to get a bit calculatively intense. Buying and selling pressure is going to affect your prices. Your average here is, you see you're moving, take a look at this, you're moving average in yellow. I don't want to get into a kernel calculation with you. I can. I would choose not to. If you look at it as a moving average, just a weighted moving average, it's going to be simpler. Now, I was one of those guys for some reason, in my freshman year of college, I went to take doctorate level advanced linear calculus. I just had to. I don't know why. I had to get permission from the dean of Duke University. And she said, so you want to do this? I'm like, of course I want to do this. It's whatever the course was. She let me into the graduate doctorate level course so I could go take advanced linear calculus. I don't know why, guys. I made the decision then. I looked around me and I'm like, hold on, everyone here has glasses that are like this thick, and it was somewhat of a scary experience. So the calculatives, we can get into it. I don't want to overwhelm you. It's not cool. It's not fun, right? So volatility is buying and selling pressure. We'll stick with that, okay? Pegged instrument at $1, pegged at $1, zero volatility. Something that's swinging around from $2 to $20 to a quarter to, you can say, well, I don't want to trade that. It's going from $2 to $20 to a quarter. I don't want to trade that. But if you can identify the levels of volatility and how frequently it's going to hit certain targets between, let's say, $2 and $20, and even the targets between let's say the dollar or $2 and the quarter. We want to see the cyclical range of the volatility. We want to trade it. Yeah. Simply put, without calculations. So I'm interested, and I do that to explain what the scale is on the right. Get past the prices. The scale on the right that you see 0, 2, 4, 6 to the upside, 0, 2, 4, 6 to the downside. Okay? Those are levels of standard deviation. Just say standard volatility. That's what it is. Okay? The 2 is Bollinger. You got that. The 4 is way past that 2 Bollinger Band. The 6 is way past that standard Bollinger Band. And the specific measurements to the upside, these hits to the upside, past 4, you're going to see hit 1, 2, 3, 4, 5, 6, 7, near 8, 9, 10, 11, 12. At what level? Hold on, this is Bitcoin. This is on the 5 minute. On the 5 minute, you see that many hits, 10 hits at the 4? The standard deviation of 4? Guys, on the 5 minute time frame, in the past, 4 days and 23 minutes, you have 10 hits. A few are just shy, probably 3938. 10 hits at a standard deviation of 4? Now, those are beyond the 95% of the price action that Bollinger Bands are sold for. But I'm interested in this, and I know you are too, as you start to say, okay, so this is going to help me identify key levels of volatility which seem to be cyclically implied on different time frames. If I go to the 15 minute, I'm seeing hits at the 4 up and through the 5. I'm seeing 5 as a max threshold along here on the 5. Let me clean up this chart above. I've got a lot of Bollinger Bands on, just standard deviation lines. Okay, just standard deviations. What does that mean? How far is it moving from an average? Right? How far away are we? It's deviating from the average. So these become very important as you begin to use the indicator. It's going to take a few days for this to soak in. You're going to need to spend a week with it. Throw some light trades at these levels when you're learning to use the volatility, which I love the volatility bands. The simple, easy answer. Now, aside from, and guys, why would I be so excited about volatility bands? Look at all these hits. Look at these hits below. Look at these hits down into 7 or 5. And as you look at the pricing above, you're going to see that these are moves in the market. Boom, right? These are moves. Bam. Yeah, these are moves. Boom. These are moves. Boom. Not big move there. Weighted skip, divergence. We'll get into those. These are moves. Boom. Right? Yesterday's move. Boom. These are moves. Boom. Now, two ways, two things to look at. Well, I want to be part of the move, or I want to catch the move. Right? Because there's two ways to look at these volatility bands. This is what I want you guys to spend time looking at. I don't want to give you this answer right off the bat. I just don't. I want you to look at it and say, okay, so we're moving down to price, or price is moving down to me, essentially. I'm going to catch it. Or I'm going to move with it. That's the beauty of this from a trading standpoint. You guys know I develop indicators. When I develop an indicator, I don't always want it to be the quick, easy answer because I don't want a room full of quick and easies. I don't. I want guys who are willing to challenge and square up with the market and bam, 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 right? Well, I know some big guys. I just do. I want to be able to rock the house. I just do. That's me. I want literally guys that can square up in the market and just crunch it. Big, heavy-handed guys and girls that know what they're doing in the market, that nothing scares them, that they have their own opinions. And they go and talk with somebody. This is VIP. I'm telling you guys, I want people around me that don't just, well, I have an indicator and I decided to, it says go and I go. So with everything that's developed with VIP, I want you guys to have that presence when you're talking with people. And it's not just, I want to be tough on you or tough on the traders or myself. No, I want you to be able to defend yourself in a conversation. Defend yourself in a conversation with some guys that are hot-shotting around about, I got into a pump and dump. Oh, wow, huh? So you got a new Ferrari, okay, a $500,000 Ferrari in pump and dumps. Wow. I want you to know better. I want you to be a real trader, okay? It's important to me, the culture of all this. I've grown up with it. You guys have, some of you have, some of you haven't. It's important to me. Be distinguished, literally, in your trades. It's important to me, guys. So there's a lot more to get into in terms of what are these prices. The last thing I'm going to do, because we've covered enough of this, the last thing that I'm going to do is one feature that'll probably, it's going to set the standard in terms of what we are offering, guys, in terms of the complication and levels that you can take this to are just, they're phenomenal. Okay, I want you to, the opportunity for you to really advance in your understanding of volatility and capturing that. Is it a target to go pick me up, or am I going to jump off with it or jump up with it, right? Be a part of the ride, or it's coming to me, or both, technically, both. You're going to have to get into confirmation. Now, take a look at the indicator. Double click it. Double click. I want you to go to inputs. Now, I want you to click on extreme mode, because right now, I got to tell you guys, right now, what are we even looking at? Pay attention, please. Right now, we're looking at volatility levels below. We're looking at those volatility levels below. You guys know that, right? We're looking at the extremes beyond the 2 or standard Bollinger Band. We're looking down, deep in the red, past the red, beyond 4, way up above, beyond 4 to the upside. We're looking at those extremes. So let's double click, but what don't we have? We don't have any pricing. So if you want extreme mode, double click on your Bollinger Band. And you'll see, if you scroll down under inputs, go down until you see under Z-score settings, click extreme mode. Click extreme mode. Now, we have scheduled up like a pro shelf TA desk on, I'm going to tell you guys, this is good stuff. I don't know, this is good stuff. I won't tell you where I would think I'd see this. This is really good stuff, okay? If you click extreme mode, what's it going to give you? Okay, it's going to give you, based upon the preceding number of intervals that you specify, it's going to give you targets to the downside of where that would be, okay? As price approaches, this is always going to be the case, as price approaches, it's going to become more accurate and more relevant, okay? But right now, we're gauged in with the entirety of the preceding volatility. Yes, we've had hits, and your prices will only show up. You'll only get the prices if volatility has dropped to that level before. Okay? You'll only see a price if volatility, sellers have engaged to that level before. You'll only see to the upside of volatility if buyers have engaged to that level of volatility before. Within the dynamic, within the specified range. You guys get that? Sellers have achieved this level to the downside before in terms of selling. All right? What would the price be? Okay, buyers have achieved this level of volatility, let's say to 4, Z4. Precedingly, okay, well, what would that price be? Now, shift. Good idea, we love that, great, I'm gonna use it. Shift. Larger time frames. Larger time frames are going to be less dynamic, okay? They're going to, I encourage you to work on the lower time frames if you're going to get into targeting with volatility. Work on the lower time frames. You'll appreciate the larger time frames, okay? You'll appreciate what the larger time frames bring to you, okay? You'll need to walk through some of that to understand as you become closer to the Z level, to that volatility level, we'll call them Z levels. As you get closer to that volatility level, to the upside or downside, it's going to become more accurate, okay? It's going to change. These are constantly changing. You see these figures, these prices change. It's a good thing. We want them to change, right? It's accurate. It's increasingly accurate. We could stagnate it and update it every 5 minutes. You guys know that on a 5-minute chart or a 15-minute chart? We could just say, oh, don't worry about it. I'm going to update it every 15 minutes when it closes. No, 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 no. This is live, dynamic, capiche. Good stuff, guys. I could just say, okay, you see the figures changing, the price is changing. Could have just said, no, I just want to update it every 5 minutes. I just want to update it every hour, or I want to, whatever time frame we're on. You get it. Bam, 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 bam. This is for day traders. This is not for, I want the answer for next week today, and I want to go take a vacation. Nope. Okay. So let's go back and unwind to the capital line. Shout out VIP. Hope you're doing well. What did you guys expect, huh? The quantitative kernel delimiter right on the daily green byline. Let Fire and Ice speak for itself. Let it speak for itself. Great example, Bitcoin, great example. This is a great example. We had a 62% chance of going lower. Without a doubt, I promise you we did. Based on all the history of Bitcoin, of let's say the markets literally for Bitcoin and of the 40 plus years, decades in proof on back to 1790 of the New York Stock Exchange, we had a 62% chance of going lower. Without a doubt we did. Without a doubt. What did we hit? Well, the 62, the 38, we had a 38% chance of going up, didn't we? What didn't we do? What didn't we do, guys? What didn't we do to go lower? We didn't, for starters, even as we look at the current condition of price, and we were to scope out this specific dynamic here, what do we need to really break on through this level? We need to set a candle, a solid candle, don't we? Below the level of support. Did we do that on the daily? We didn't do it. Sellers didn't achieve it, did they? Nope. Okay, so within the scope of a 62 to 68%, 62 to 68% chance of going down. 62, 68, depending upon market conditions, bull, bear, etc. Let's say this. We didn't set a candle below on the daily. We'll look back at this. But as you look at your probabilities, you still need to find a technical conformance in terms of your trade. You still need to find operationally what's going to allow you to get to a lower level. So a 60, guys, a 90% probability of going in a direction becomes absolutely useless if we never break through a level of resistance to the upside, let's say. A 90% chance we go up, it becomes useless. 90% chance of going down, well, unfortunately, it becomes useless if we don't break a level of support. We know this, so we speak about probabilities frequently to give you, just to put things in context, rationally in the markets. We still need all the other gears. We need all the other gears, don't we? We need all those other gears. Now, in terms of the specifics, back to the capital line. Basics on the capital line. I want to double click on the indicator. Show only capital line. It's one of the first things under inputs. Boom, click that, okay? Show only capital line. Your moving average is in yellow. Guys, that moving average is the 20 moving average. That's it. Just take it what it is. That's the central line on your Bollinger Band. Warning. Just take it as a warning. Analyze both sides of what that warning could be. All right? Yes, it's a very important line. There's more interaction at that line, guys. That's the mid-level line of a Bollinger. Price is all over that line. You're going to go up to it? You're going to go up to that? Or is it going to come down to you? You're going to go up back to that 20 moving average here? That exact price? You're going to go back up to it, or is it going to come down to you? What are the things that you need to get to it? On the micro, the same type of situation we just talked about on the daily. Oh, you need a candle to close below the this, or we don't even, who cares? We have a 90% chance of going down. Right? So I say that in the context of fire and ice. Let it speak for itself. So many times it puts the gloves on in a heavyweight routine and just boom, Mike Tyson style, first minute, first second, or Muhammad Ali, it's over. Boom. I'm just telling you, right? And consistently champs through a lot of the equations. And I don't like to bring up again, well, laddering and scaling. I bring that up, I put an info card up, laddering and scaling beyond a specific level, beyond a specific byline. How many times do you see fire and ice go through a specific band and catch right back up? How many times? A lot. You see that a lot. They're levels of interest. And what that is, what is it on fire and ice, so that we understand and talk about our other indicator? Fire and ice is, okay, they're levels of support and resistance that are calculated and presented in terms of your chart, your price action. So of course you're going to get traders that are interested underneath that level of support. And you see price traject back to the upside. Of course you're going to get traders up and over a level of resistance. I say laddering and scaling all the time, but understand the dynamics. Like, well, why isn't it perfect? It's not. It's a level of support and resistance calculated for you on fire and ice, right? There's always going to be someone that's going to, and at the risk of being left out of the trade. Sometimes there's a perfect hit on support. Sometimes. Other times you're going to see the traders that are a little bit swifter underneath. They really want to dig in. They're ready to capture that lower. And sometimes you'll see a level of support and buyers are forced to play aggressively to hit to the upside. Tesla. Everybody's like, God, Tesla was close, huh? It's a good example, though. You can repeat Tesla on, we have enough volatility in crypto. You missed out on, you didn't miss out on anything, guys. It's the market. She's going to push you. So sometimes you're going to dip underneath. Sometimes she's going to require you to be aggressive. It's the market. That's the beauty of the market. So as we look at the capital line, and I was talking about a low pickup on Tesla that I brought to the VIP, literally so close on TradingView, so close. Bullish pattern I brought up along support. It was so close on TradingView that the radar dynamic, literally that radar, that pulsing radar on the price, literally was on the level of support. The price wasn't, but that radar pulse was on the level of support. That's how close that pickup was on Tesla. Such is life. Such is the market. It's exciting. We like that. That's a good component. You guys have to agree in terms of competition. Being prepared, staying plugged in and beyond, right? Sweet, huh? It's nice. Now, let's take a look at, we'll incorporate fire and ice at later times. Right now, you know, red, sellers engaging. Blue, okay? In terms of the capital line, blue. Let me move this. Let me see how well I can present this for you guys. Let's do this on the line chart, not the candle. And red, sellers engaging. Price heading down. Red, sellers engaging. Price heading down. Okay? Now, you guys can deal with the lower time frames to get an idea of how this may move when you're getting a solid indication based on volatility, power of the bulls versus bears, how accurately you're getting entries and exits for your trades. Okay, some time frames are going to work more specifically, technically, point, click, shoot, automatic kill, bam, right? You're hunting or something, right? I got a big trophy buck. Got me a trophy buck. Huh? I did what it told me to do. I want you guys to trade. This is a great tool, but I want you to trade. We're just going to hand out trophy bucks all year long. Everybody, we're going to hand out trophy bucks. Doesn't matter who you are, sign up for $100. Doesn't matter what you do, sign up for $100 and we're going to just hand out trophies all over the place. We're just going to hand them out. We decided this year we're going to hand out trophy bucks all over the place. It's that type of trade group. All you do is pay $100, expect to make 50 grand your first month, 250 grand your next month, no problem. Now, I want to see people trade. I want to see them fit within a dynamic that is almost treasured within the scope of trading. To start with, that they understand what they're doing, and they've explained to me that they understand what's going on with the markets. They understand, and this is the reason why. It's not being tough. When you understand what's going on in the markets, you understand your position, and you can negotiate it. You can trade it. So on the cause and day, when your indicator, your golden key indicator is wrong, you're still capable, literally capable of navigating in and out of the market, of protecting yourself in the market. You're not going to have these sad songs. Everybody got wiped out on that move. Everyone's just scared, shaking, and crying. Not in VIP, not in my trade group. So yes, the indicator is going to be a phenomenal tool for you, like fire and ice. It caught the bottom on the daily of Bitcoin. Listen up. Who have you heard that from? Let the indicator speak for itself. Who have you heard that from? Anybody? Nobody. Nobody. So that's what we focus on. That's why I built the indicator. You know that, guys. You know that. So in terms of the dynamics of the new indicator, I want to say good morning to BIP. I want you to respect our trade group. I want you to respect my participation in the level of work that goes into it. I want you to respect Venus and any girl that's in our trade group. We are not a casual, maybe a kind of dating site or a meat market or anything else. We have some beautiful women in our trade group. You will respect them or you will be out of our trade group. A romance song and dance is way over there. You guys go find a Facebook. Go get into a metaverse. Okay? We're here to trade. We have beautiful, beautiful women in our group. We treasure them because they're plugged into the technicals. Bottom line. We've got some stout powerhouse guys. That's who we hang out with. That's who we are. Yeah. And why are we here? To trade. Bottom line. Bottom line. Period. Capiche. Professional environment. We've had former JP Morgan, former BlackRock, professional corporate considerations, hey, come into play. Professional corporate considerations come into play. You guys got that right. Big time. Big time. So as we look at this standard pattern, you can review the beginning of the stream if you'd like to in terms of what our trade group is or is not. It's not necessarily there to make people happy. It's just not. I don't accommodate to the big mass crowds. I built a tool to catch the bottom of Bitcoin, and we're not, just say this, guys, we're just not, we're not Johnny-come-latelys. We're just not. I'm not here to hype you up, necessarily even make you happy. I'm here to make sure you know how to trade. And if you don't want to learn how to trade, if you just want to follow the next wrong step on the next hype train after something's already moved, hey, it's okay. But we're serious about this stuff, guys. Real serious about it. And I'm serious about just having the best VIP group that we can. I want to shout out to Venus. So glad to be building with you in 2023 and beyond. Told you guys we're going to take the market by storm. Now, looking at this specific pattern formation here, tell you what we need. Technically speaking, we need a candle breaking down below level of support to set a candle. All right. Now, as we were to look at any upside target, what are you going to need to do? You're going to need to break the 20 moving average. This is on the 4-hourly. All right. It's been trading well. You look at the dynamics of up and over the 20 moving average, top side band hit. Down below the 20 moving average, bottom side band hit. Up and above the 20 moving average, upside band hit. Down below the 20 moving average, downside band hit. There's a lot of trades. Very consistent. 20 moving average, bottom band. 20 moving average, top band. Bottom band, top band. Bottom band, top band. You guys see, is it a point, click, and give me my trophy buck, give me my prize. No, you're going to have to trade it. You guys know that. Decided to bring you that information. That's from the New York Institute of Finance. Recognized technical approach and tactic from New York Institute of Finance. Some people hear that and they just run for the hills. That's fine. It's okay. It just is, right? That's where pro traders go to school. Some people hear that and they're like, ugh, I can't. Maybe you already went to too much school. If you did that, I understand. We do have that reversal fan in play. Shout out to JMac. Really appreciate the charts in the back. Shout out to Chris. In terms of land down under. What's up, my man? VIP. Chris has been a trader for, how many is that? 15, 20 years? It's great to have that dynamic in play. What do we want to light this up with? I'm working on another chart right now. What I'll say is this. We streamed early. Let's take a look at equities while we can. We got a jobs report in. NASDAQ, SPX, S&P. Dow underperforming this year. Just notable. We're not on equities today. But I will encourage you, if you're going to be using the indicator, the new indicator. Let's take a look at Tesla. If you're going to be using let me see if I can rewind here to get the indicator back. But if you're going to be using the indicator, okay, as a financial tool or instrument to create profit, you need to understand one thing. That first, in order to do that, to literally sit down and make your plans to buy your summer home or your vacation home, or you're going to play a little heavier this week and you're going to go hop in the jet this weekend. You're going to go ahead and hop, whatever you do, guys. Before you hop in and start making the financial decisions, make sure one thing. Make sure you study this enough to know what it is. If you don't know calculatively what this indicator is, and I mean you can't explain to someone what's going on with the indicator in terminology that you can find in the New York Institute of Finance, that pro traders use. If you're not there with this indicator, don't use it. I would challenge you, if you're not there with any indicator, to don't use it, guys. Be capable of understanding, and guys, what you're doing in the market. Be capable of understanding how you need to cover yourself in the markets. And that's when I get a little tough like this, it's because I've seen people get hurt. They show up, they think, oh wow, I'm going to do this. And guys, the sad songs, they're not on my phone. Not one sad song on my phone. Not one. I've got two phones. Not one sad song on either one of my phones. A lot of people show up and don't hear exactly what they want to hear. They don't wind up on my phone. They don't. What winds up on my phone? What winds up on my phone? Bitcoin trade alerts.
Bear alert, 1 hour time frame.
Okay, now I have a bear alert 1 hour time frame. I understand what that is. I understand what that alert is and how it's been behaving. To the extent I'm testing that, maybe a bit. Let's look at Tesla. If you want, let's look at Microsoft. If you are trading this and expecting it to be a financial tool for you to create additional capital, and you don't understand it or couldn't explain it back to me or someone else in terms of the real operation, the function of buyers and sellers, the volatility levels, if you can't do that, don't rely on it as a financial instrument. And when you can do that and you can defend it and your own position and utility of it, your usage of it, perfect. Because then you can sit down with a developer and you could probably build it. Yeah? Good challenge, VIP. If you can sit there and understand what it is, you could sit down with a developer. It's probably just a matter of cutting a check for 50, 100 grand, you build it. No problem. But understand it to that level before you're putting real capital into it. Otherwise, what are you doing? And if you're doing that here, investing in ways that you don't understand, we're a pit stop, I guarantee you. We're a pit stop for you. If you're investing in ways you don't understand here with tools you don't understand, and you have no desire to conquer those tools, guys, we're a pit stop. And you're going to do what? You're going to go do that somewhere else. You're going to stop in here, shop around, see if this is what the right answer is for now or this or that, not understand it, and it's a pit stop. You're going to roll over to somewhere else, do it with that group then next. It's like a bad habit, huh? Not good. So the dynamics are in play here. I want to challenge you guys, VIP. I want to challenge you to understand the parameters, and it's not good, guys, because it means like sometimes you got to rewatch something. And You have to rewatch things. Sometimes it's like you have to hear things that aren't fun, but they're good for you. They're good for you. I promise they're good for you, guys. Understanding what you're doing in the market. Yeah, big time. Understanding what Bollinger tactic is from the New York Institute of Finance. New York Institute of Finance has been around for 100 years. They were founded by the New York Stock Exchange. I see. The launch from Bitcoin at the bottom was what? Well, it happened to creep up over the Bollinger Band 20 moving average on the daily. And what did it do since then? Up until today, what has it done? It's been over the 20 moving average on the daily. Now talk about these tactics. Learn what they are, be able to deploy them, understand them, assimilate them. It's a lot of technical information, you guys know that. It's not supposed to be easy. Not supposed to be easy. Every Dick and Jane wants to wake up and decide he wants to be a day trader. He wants to conquer the market. He has this empowered, there's Napoleon, boom. There's Alexander the Great moment, boom. I'm going to be a day trader. I understand this market. I saw it. It's mostly like I saw a new feature, a new trick, a new technical. You know how many people have those Alexander the Great moments? It's wild, isn't it? It's amazing. So the hard work, and by the way, really good news. We are going to receive, look at the Microsoft chart here just for a minute because it's doing really well. We're going to be receiving some books. I'm going to give you guys one little word of wisdom here on this indicator. Okay, please pay attention to one more thing. Microsoft is a great example. When you're picking up in this area of the expressed volatility right here, pay attention, guys, pay attention. Yeah. The level of volatility expressed on the capital line. Do you see that? That's the kernel average. That's the weighted average of volatility. You see that? Right around 1.28, okay? Now that's a great pickup area. Here, right? Not so much here, we have a divergence. You see this, big time divergence. Now, if I click on divergences, this is gonna be something, guys. I don't want you to get lost in the woods here. Pay attention. Now, when you look at something that's consistent in terms of a cyclical, and you are approaching it, well, it didn't work here. What's the number one thing a trader starts to really think? A real trader starts to think. That's okay. What's my return? Number one thing, you look at something that doesn't work, I'm not worried about that. What's my return? What's my payout ratio? Okay? When you look at something, a beginning trader is going to say, it's going to work, it's not going to work. Well, it didn't work right there. Look, it didn't work right there, I don't want to use it. Yeah? What's a sophisticated trader going to say? Okay, what's my payout ratio? Okay. What's my payout ratio? As you were to look at payout ratios, and this may not compute with stream ongoing. Maybe someone has decided it's too complicated to get into right now. Hey, I'll take that. That's fine. Very well put. You look at something that works. This is important, guys. You look at something that works, and it only works 3 out of 10 times. Now, that's not the case here. But it only works 3 out of 10 times. Oh, shoot, huh? Can't make any money on that, can you? Unless the 3 out of 10 times your payout ratio is 10 times what you put in, right? So when you find yourself saying, well, this works or this doesn't work, it doesn't work. Right? Look at that, look, it doesn't work. Oh, really? What's a real trader going to say? That's fine, it worked 3 out of 10 times, what's the payout ratio? Can you imagine presenting traders, literal groups or rooms of traders, imagine this, guys, with literal sets of information and tools to use? Just imagine, right? I'm not saying it even applies to this, guys, but imagine the grand experiment with all the Alexander the Greats who are going to get into the market and take it by storm, and this is it. I'm going to conquer this market. It's mine, right? That saga that people get in their minds when they get into trading. You're going to show those people something, and they're going to look at it and say, no, it doesn't work. It didn't work right there. 90%, 95% of the new traders are not going to get to, well, what's the payout ratio? Okay, so this thing works 3 out of 10 times. Okay, that's fine, as long as, what if my payout ratio is 10 to 1? Good good thought process to start with. Takes an advanced process to get through to further that equation, beyond the scope right now. Now, ideally, let's just go to Microsoft. Ideally, the following. Let's just touch on Microsoft. I've been enjoying the price action of Microsoft. It's not Bitcoin. We'll get back to Bitcoin in 1 second. But ideally, what we want to do is identify a reversal and let it challenge. That, if you want to look at an inconsistency here or otherwise, my quick fix, there's not one. But in terms of at least, let's say the short, condensed answer. You are welcome. Thank you. Hey, what's up, Sean? My man, what's up, brother? How are you? Good to see you, Sean. That's my man right there. It's been a while, Sean, the man. Appreciate the update, Chris, as well. Sean, what's going on, brother? Good to see you. Hope the family's well. Hope you're well. Hey, what's up? Sean, I added you to the indicator. You have access, okay? Maybe rewatch this stream. Not much chaos. It's been pretty good. You get me with no calories and 2 cups of coffee, and I've been up since 4. Working on 4 hours. It's like London needs some food. You betcha. Now, in terms of the equation here, I thought yesterday, you'll like this, Sean. I literally thought yesterday, it's like we almost need a crypto survivor show, don't we? Because the survivor, they wind up and they're just, they're cold and barely clothed. They're on a deserted island. They haven't slept, but whatever's going on with them. We almost need a crypto survivor show. It's like, you could imagine people like, well, that guy hadn't slept, huh? That guy hadn't slept at all. That girl's been up for 2 weeks, huh? She's not even eating anymore. We have the rescue team, right? We have the rescue chopper about to go in. Funny stuff. What are you, a crypto survivor, huh? Like, that guy hadn't eaten in like 3 days. He hadn't even slept. He's going to make it. No, I don't think he's going to make it, huh? He's a goner, huh? He's going to quit. They're going to have to come rescue him. That's funny stuff. What do we got, Sean? We are doing great good. Trying to keep up on Twitter as much as I can. New HQ is dope. Hey, my man. Sean. Nice to see you, Sean. It means a lot when you guys stop in like this. Hey, Sean is really technically oriented, and he likes the short. He loves the short. Yep. The guy can short. Not everybody can short. Some people see the market. And Sean's like, well, I haven't talked to London in a while. I pick up on this stuff very early. You're geared for it. It's good stuff. Now, the 2 things on the indicator for Sean and everybody else, and Venus, you're welcome. Without a doubt. Welcome, Venus. Huh? And thank you for thanking me. I appreciate that. And I thank you. Hey. I'm not building with anybody else. That's the bottom line. We're building the group, but I'm not building with anybody else. We're building in 2023 and beyond. That's just it. We're excited to be building for you guys and Venus. It's been a lot of hard work on every different front. So in terms of that, thank you. And thank you for thanking me. Now, Microsoft is a great example of doing what? Trying to pick up on a pivot. I've got a divergence tool built into this preceding equation. Don't worry about it. We have divergences. What I'm interested in is, when is there a pickup, a reversal on price? Yes, price above, and on the weighted average below, volatility. It's just buying and selling pressure. But it's really nicely laid out, guys. Really nicely laid out. This is not your RSI or stochastics. It's not, guys. A borderline like cipher. Ooh, I use a cipher. Guys, you want to spend 6 months or a year learning how to use a cipher? This is nice. You guys, I've been around a long time. You guys have too. This is nice. So, not to discredit cipher or whatnot, but I won't comment. No comment. Now, picking up along this expressed cap line bottom provision, if you can catch this turn, boom. If you can catch the turn, then you can work with your position as it were to continue to outperform, right? If you can catch one of these across the top, if and when you catch one of these across the top, This is when I get into payout. I get into the payout example. Okay, you're going to catch this across the top. Wham! That's a nice hit. That is a nice hit, right? You're looking at 10, 12, 15%. Some of these a little bit more, a little bit less. But the notion is this: if you can catch a potential pivot in the market, and shout out to Venus, one of my favorite things to talk about with you. If you can catch a potential pivot in the market, if you have tools that can help you identify, well, all I need to do is catch a major pivot. Now, that's beyond the typical standard retail trader. The trader wants to know, is it going up or is it going down? Is it going to go up or is it going to go down? Oh, what do you think the price is going to be? No. What do we want? We want a pivot. We want to catch a pivot. We want to own the high. We want to own the low. Hey, fact. We don't want to, jump on board after. It's such a classic. And Sean, I know you keep up with professional networks, yeah? The CNBC, the Bloomberg, they're even famous for it. Look at the price action. Look at these gains that we've had. They're literally exciting you into that condition, that event that's already happened. That's not what we need. We need to catch the pivot below. We need to catch the pivot above. So as you look at this, let the indicator speak for itself. Same with fire and ice. Let it speak for itself. This volatility range here on Microsoft. You say, well, don't do this. It didn't work there. We've got some divergence tools, which are increasingly complicated. So for right now, start to think of if you identify a specific area where you didn't see it work the way you wanted to, okay, chalk it up. What's your payout ratio? Okay? Remember the example right now, because I only hear pro traders talk like this. In terms of what's your win rate? 3 and 10. What's your payout ratio? 10 to 1. Okay? Start to think a little bit like that. But while you're figuring out your payout ratio, if you don't know it, or your success ratio, that's not an equation that you involve a lot of cash with. You guys know that? That's not an experiment you start to play. No, guys. But I only hear pro traders in the context. I only hear pro traders like, what's your win rate? Yeah, cool. What's your payout rate? Boom. Case closed. Now, is it going up? Is it going down? No. Win rate, payout rate. So when you see something didn't work, good. Didn't work. What's the payout? What's the payout ratio? That's it. Okay. So catching a pivot, boom, and then you can let ride. Yeah. Then you can let ride. Does it become more difficult then to catch the top? Huh? We'll work on catching pivots. It's a big deal. When you guys own a low or own a high, it's a big deal, guys. Bragging rights. Big time. And the market is a little bit, what do I say, particular about who it allows to really own those positions. Sometimes it seems like that, doesn't it? I just can't catch this. I can't catch that. What else is going on in your life? I gotta tell you, the guys who are catching it, they are plugged in, laser-eyed focused. The girls who are catching it are plugged in, laser-eyed focused. It just changes all the time. You guys know the market changes by the second, so it requires that level of diligence. We went through adding in the prices, the extreme mode, all right? We went through the capital line, showing the capital line. We went through the volatility bands, right? Coffee's good. We went through the targeting, right, to the upside, preceding hits, right, up and above a standard deviation of 2 that you would normally see on a Bollinger Band. Now, I'm going to say this. Bollinger Band is relevant. It's not the only game in town. On this indicator, if you're just focused and thinking it's just a Bollinger Band tool, you're not operating in line with the reality of this tool, the volatility measure. It's way beyond that, okay? And it'll have some different applications down the road, but for right now, I think you guys have a great tool. So we went through the volatility bands. The last thing I'll leave you with is the following, is the notion here that you will have specific patterns demonstrated on your volatility bands to the extent that you choose to have those volatility bands, or you go cap line only. That red and blue line is the capital line. Okay, look at this. Show only capital line. Double click, and there you have just the weighted average, a kernel regression calculation. We love when it turns red and boom, we can get some downside pressure. Sellers are engaging. We love when it turns blue. Boom, we get some upside pressure, right? So catching that pivot is critical. Now, in terms of the volatility bands, let's not just look at the capital line. Let's look at the ascending triangle here. In the volatility expression, we have an ascending triangle. Look at that. Flat top resistance, ascending line of support. Look at that, guys. Before the whole launch here, the volatility bands, that activity between the buyers and sellers, it's actually creating a pattern that's a reliable pattern for us to work on here. I want you guys to work with that. Start on the daily. Pay attention to the patterns in play. And what did that mean? Well, we would see quite frequently a return to prior resistance on that pattern. Ba-boom. Yeah? It's going to be good, guys. If I challenge you, guys, I don't want to, it's the worst thing in the world, like when you're young and I had coaches like this. Maybe that's why I'm a little tough. Who knows? Maybe it toughened me up for the good. But you don't get a hit, and what the coach does, you get in there, he just screams at you. You didn't even get on first base. You didn't even get a hit. It's like, is that really constructive? We're grown men and women, huh? We are, huh? We're not this little, gonna go pout in the corner. It's just, we don't, I don't know. I just get that impression it's like this coach, he kind of ruffling the kids, all the parents looking by, this coach, he got some problems here. It's like everyone's looking at this coach, the baseball coach or whatnot. You're yelling at the kid, he's never going to get up, he's never going to do well at the next time he's sitting there looking at the coach while he's at bat. It's not a good dynamic, you know that. We're grown men and grown women. So if I give you a hard time or I define the characteristics of our group, it's because I've seen what happens, and it's not even necessarily directed at you. Sometimes people come in the stream. They're not fit for a VIP. They're just not. They want a quick, easy answer. They want to be, they already have the solution in terms of their participation in the market is the first most important thing. They decided to trade. I'm a trader. Guys, they get out there. It's crazy what people get into. So we like the respect factor. Okay, we like the professionally geared technicals. I don't mind running people off. I just don't. Hey, good morning. My man, J Mac. What's up, brother? J Mac. Bam, bam, bam. Cali VIP in the house. What's up, J Mac? J Mac love the charts, huh? I'm gonna put love those charts. Nice, J Mac is rocking and rolling. He's awesome. Love those charts. J-Mac is always looking for the right answer. Love people who are looking for right answers, guys. Venus, don't even look at her New York Institute of Finance book. It's just literally boom, 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 with indexes, references, highlights. Hello? How many people buy a pro trading book and never even look at it? They're going to flip through and thumb through it. No, Venus's New York Institute of Finance book, it is loaded up, guys. It's awesome to see that. That's the level of discipline and consistency it's treasured here in VIP, without a doubt. Quick, easy answer, I want this and that. And just understand, I bring up some of that today because it's a big talk about an indicator. And so as we talk about, and this is kind of launch of indicator, you hear some from me quite a bit. And some of it's a little bit rough, some a little bit tough. I don't want it to be a point, click, and hand out trophies. Everybody gonna get rich. No, I want it to be a challenge. Enough of a challenge to where you understand what's going on in this indicator. If you don't understand it, you're never gonna appreciate it. I'll tell you that, or the hard work that went into it. You'll never understand the hard work that went into this indicator. Okay? Like with Fire and Ice on the daily green byline. It hit it. That was the low. The low. All right, it's a fact. Now, most of you probably traded 200 or 300 times between the low and now. I understand it. An accumulation master owns the low. Okay, period. So in terms of this indicator, and I just tell you, if you don't appreciate it, if you don't appreciate the skill or the technical understanding, you're probably not going to use it either correctly, guys, or at all, really. I want you to appreciate it. It's a big deal for me to give this to you guys and to release it with our name on it. We have a good track record. We have a very good track record in terms of trading. I tell you guys, we have a good track record. 2021 was really nice. Really nice. Bull markets are nice. We have a track record. Shout out, Venus, what's up? I say this to people and people don't appreciate it. This is very important. Pay attention. You see this? Now, everybody did what? Forgot all of their losses along the way here. Everybody during this time frame. Let's focus in this time frame. This is great, guys. This is VIP. You think things are tough, this and that, well, you doesn't have to have an attitude with it. Pay attention to this. In this consolidation time frame, the last 239 days. I think is that the number for plutonium? I don't know what it is. Anyway, 239, very specific number. 239 days. What's the fact? Venus, shout out. Condition greens, everything else, guys, Venus knows how to trade. Exciting to be trading with you, exciting to be building with you, Venus. But everybody forgot all the losses in the entirety of that range. Everybody did. And everybody's making money now, right? Everyone's, ooh, we're making money. What's a fact? We made more money here, boom, to the upside. Or no, we made more money here in the entirety of it than we did just here, boom, to the upside. Now that is a huge credit. And Venus, I got a shout out and just give you credit. You're awesome. I try and tag team as much as I can with entry, exit, TA, this, that, condition, green, this, everything. But guys, Venus is a powerhouse. I'm going to tell you guys. I've worked with, and credit to Venus, I have literally worked with and hired, literally, like the number one trader from Wall Street. Number one trader at Bond Desk. Like internationally speaking. Now, when I talk about traders in general, a lot of the same characteristics pop up. And it's not to say, well, Venus number one and this and that. That's not the point, but I've been around a lot of talent. I have been. I've had a lot of talent come to me and be like, hold on, hold on, I mean, what do you think about that? You know, I don't know, because I don't know. Literally. The number one trader on Wall Street, you have to understand, and that's some good context here, number one trader on Wall Street literally will come and ask me a question and be like, I don't know. Did you hear Bloomberg this morning? Hello. The number one, guys, you know, former hedge fund owner, private, non-SEC, not financial advice. Listen, Bloomberg this morning for 2 straight hours sitting there. Well, we don't know exactly what's going on with the markets. There's no clue. There's no explaining anything at all. We're not certain what? They don't know anything. They have no explanation. Literally, for hours on end, they're sitting there talking about not knowing why things are going the direction they're going. All right? So I bring that up in terms of the dynamic. It is not uncommon to see, let's say in Bitcoin, in the last 239 days, everybody loses. I'm telling you guys, everybody just lost the ranch, right? Oops, everybody just lost the ranch. Now, as you look at this, everybody loses the ranch and then what? Well, then they get all excited because they just made 10% of their money back, right? Hey, we just made 10% of our money back. Thank God. Huh? Thank God. Hey, the market's back. We're back. You know, they're operating on like 10% of their money, right? Not here, not in VIP. So Venus shot out. We were very involved, trading this and that, CPIs, et cetera, guys. And we don't get into all that. We don't broadcast it all, et cetera, necessarily. But she's consistently awesome. You guys know that. I love trading with her, being around her, whatever, and to the extent that we are able to do that, she's also very busy. All right? Now, looking at the entirety of this, what's the greatest thing on VIP scope as you guys look at, okay, so London and Venus are trading, they're doing this and that, whatever. More money was made in here than was made here. Guys, more money was made in here than was made here. And guess what? This wasn't missed. This was not missed. That's not easy to say, guys. not easy to navigate through multiplicity of patterns, etc., contrary opinions, probabilities, surprises. You wake up, surprise, it's a big deal. So I want you to use that as an example. I'm not bragging, but as you would look at this, and if anything, I'll just brag about Venus. Love working with you, love building with you, love trading with you. It's a blast, all of it. Highs and lows, huh? You got it. Everything must be perfect, huh? Learning the Venus or building, huh? Highs and lows, huh? Just like the market. Now, as we look at this, understand this. If you can make more money, bam, in the consolidation phase, I'm pointing over there. If you can make more money in the consolidation phase, boom, 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 with all these unexpecteds, and own that, do you know what kind of bragging rights you've got with saying, well, actually, made more money in this zone in here than just this? That's the whole idea, right? That's the whole idea. So I'm going to encourage you one thing. If you didn't catch all of this, where are we at now? What principles are in line? As I talk about Venus, I use her as an example. Yesterday was all about Chris, right? And today, Venus. Just understand, guys, Venus's New York Institute of Finance book is devoured. It's highlighted everywhere, index, page flips, every corner all over the book. She's had the thing for 6 months. Guys, capable of understanding how to beat the market in this consolidation phase, capable of understanding how this represents much more opportunity than this did. This is a recovery move, break-even point. Yes. And that's my goal for you guys as you participate in the market, to be able to level back and schedule back like Venus, like we could do. It's awesome. Looking at this, being able to schedule back and say, and look at this when everyone just wants to be involved in what? In this move right here. Man, I missed that move. Man, I should have got, hey guys, where's the money? It is just draped on in through this zone before. Boom. Right? Fact. The money's in here. You guys don't want to hear that. The money's in this sideways consolidation with record low volatility on Bitcoin. Huh. Yeah, in some of the tightest, narrowest ranges. There's swing trades. Boom, 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 boom. Right? Catching some of the major drops, major pullbacks. We caught a lot of the moves, guys. First bull flag here was nice. And I'll just encourage you guys, if you can't say that, well, I've made more in the entirety of this consolidation zone last 230 or 40 days than this move to the upside, work on it. Work on it. Don't look for the next answer out there with even Bloomberg. You're going to listen to Bloomberg data. Bloomberg releases data. Jobs issue this morning, right? Yeah. Get the data from them. You'll see they don't know the answer, right? The answer is in your strategy. It's in your planning. It's in New York Institute of Finance. Bloomberg's not real big all the time on technicals. We are. And shout out to the VIP. And in terms of trading, we have a CPI coming up, don't we? Yeah. We got another CPI coming up. I want it to be the most hotly contested CPI report on the planet. Don't you guys? I want to schedule it and just boom, boom, boom. Looking forward to that. Venus will be trading. You got that right. You got that right. So, few CPI reports in here. Good measurable volatility, huh? Big time. So we have this structure in play. I'm going to encourage you guys, use your new indicator. All right, we're seeing a pickup right now. Is that on the 4 hourly? Yeah, the 4 hourly, I believe we hit that last night. And remember, it's going to be a level of support on the lines or on the wicks. It comes into kind of a critical context, pardon. And as we were to look at essentially on the 4 hourly, where we've hit is exactly in line with the preceding level of support. Now, on the back room here, I'm working on one thing. My microphone right now, and you guys got to go through this with me as VIP. My microphone right now, I've got a longer one so I could turn around and we could schedule over and go take a look at that desk. So that's going to be the next thing that we're going to incorporate here, is being able to jump over into that other side. Okay? Over there. Just turn around and bam, we go hit it, we go look at MACD. because I've got the 15 charts set up. We've got that set up on that side. And we'll soon be able to just boom, boom, powerhouse back and forth. It's going to be nice, guys. The setup, I want to encourage you all to get your setup. Get 2 monitors, right? I told you guys that Mavinex, M-A-V-I-N-E-X, Mavinex, 12-in-1 dual screen hub. It's like 30 or 40 bucks, something like that. Get a Mavinex. It worked with this laptop. This laptop didn't want to push any additional screens, just like 1 or 2 additionals. And it's up to 1, 2, 3, 4, 5 now, including the actual laptop. 5 screens is a good solution. Yeah. So Mavinex, M-A-V-I-N-E-X, 12-in-1 hub. Get that. Work on your layout, right? And for what it's worth or what it's not worth, work on your Bloomberg. Boom, 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 boom. Work on getting that data into your schedule in terms of, okay, so something could affect the market tomorrow, this morning, the CPI, jobs reports, and you'll start getting there on, it's kind of nice on Bitcoin because there aren't any fundamentals, they say, right? You hear that all the time. We've got we've got quite a few aspects that affect price in terms of timing, at least. You guys know the specifics on that. We won't bore you. So let's just shout out to VIP, the #1 trade group, America's #1 trade group. You guys saw that too, huh? The advertisement last night. We're working on it. It's just cool. Now, the key focal here is the following. On the daily, let's focus on Bitcoin in terms of technically what's occurring with the 20 moving average. And the cap line did prepare us for, let me do this, the cap line, our new indicator, the ZPAC, the capital line on the daily did prepare us red for incoming 20 moving average contact, right? So that is what we're seeing, feather in the cap. Feather in the cap right now of the new technical indicator that you all should have access to. If you don't, DM me, guys. I may not have your handle. I have changed my phone number, okay? So not intentionally, just over in Cali. So make sure, please, that you have given me your handle on TradingView. Then go under invite only, and that first thing that you want to do, just to review, is to make sure that you understand with the capital line on, capital line off, and we'll develop some additional strategies with it as you guys will proceed, and let me know what you are capable of doing with it. It's a very complicated, but really made simplistic to your advantage, and I really look forward to seeing how you guys can use it. This is London with VIP Trader and Bitcoin Spike. Excited about this hit on the 20 moving average. Feature, see a nice hit here and boom, straight down into that lower band, kind of compressed on these bands. In terms of MACD, let's jump in the back since I can't quite turn around here to the key screens, and we'll do that, and we will be up and running, guys, the way we want to be exactly, and we appreciate all your patience in the meantime, and guys, we'll talk to you soon. Thank you so much, and we'll be streaming tomorrow. I think we'll be streaming. This is another thing I want to tell you. We want to have 24/7, 365 video componentry on Bitcoin and potentially some altcoins, maybe Doge, something else like that. I'd say Doge. I don't know. We could do ETH if ETH would behave technically. I wouldn't mind it, but Ethereum's like this dark, twisted technical story that you really don't want to be a part of. I don't know if you feel like that, but that's how I feel. It's this dark, twisted, technical, weird crypto story. Like, just behave technically, That's how I feel about Ethereum. Solana's been great. You guys know Matic has been a strong performer recently. Yeah, so as we look at what to focus on, we're going to be building in some componentry of 24/7, 365, visuals, maybe a separated channel, something like that, just to say, hey, we got another channel. That you plug into that if you want to see, and maybe with some basic signals, something fun to kind of attract attention and give you guys something to digest while we're communicating in the back. All right, we'll be doing all of that. It's going to be exciting, and that's about it. If you guys have anything else you need to bring to my attention, do so on direct message. And this is London with VIP Trader and Bitcoin Spike. I appreciate all of you being here today, and we'll just kick it tomorrow. Sound good? We will kick it up tomorrow again. Never overexposed at a higher price. Guys, please rewatch this video to pick up on some additional specifics, and it's not a handout. I don't want this, and for the record, it wasn't just an all nice discussion. I don't want this indicator to be a handout. Frankly, I don't know, guys, who shows up at the front door here in terms of the trading experience. I want to make sure that you're solidly constructed. Not that it's not going to work. I want you to understand it. Be able to defend your success in the markets with your friends, with your families. Not, oh, we got hook, line, and you could make some money today and you're going to lose it tomorrow. That's typically what happens with the easy answer crowd. We want you to develop in the market, develop in line with the Pro Materials, New York Institute of Finance. We'll talk to you guys soon. Take care of yourselves. Have a wonderful day. And remember, eat well, sleep well, and continue to invest in those relationships that you knew were worth investing in before you started investing, guys. And that's just a kind of a health component of what we deal with psychologically with the markets that are open 24/7, 365. And now that you're investing in the markets, be sure and invest in these relationships. This is London.